everyone. You're tuned in to Agriculture Today, and we start our Friday show with K-State grain economist Dan O'Brien for a grain market update. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting our conversation off a little bit differently and wanting to talk about the USDA NASS report that's coming out Monday, August 12th.
Yes, the WASDE report following the NASS crop production report will give us our first survey-based set of numbers for U.S. corn, grain, sorghum, and soybean production and some other crops. We've been having wheat production numbers already, and we'd seen a sizable impact in the July report from that. But the corn report will no doubt focus will center around what the yields, acres, and total production number will be, and there can certainly be some changes that can occur in the usage side, but and if anything, given the pace of exports of late, I wouldn't be surprised that we may see some reduction in export numbers for corn and maybe for grain, sorghum, but the big game changers will be that August report. And you and I have talked about this for several weeks. The USDA sent surveys out to farmers to get their opinion on what they thought their yields were, but because of the earliness of crop development, didn't actually go out themselves around that August 1st timeframe and do any in-field measurements. So what we'll see will be largely what the USDA got back from survey data, and I don't know. I guess we'll see if farmers are optimistic or pessimistic about their crop production this year. Now, the September report will have all those same farmer surveys, plus again, the USDA will be out and get their own data. So August is important. September is probably especially important. So, I would not be surprised, given the crop ratings that we've had for corn and for soybeans, which are generally positive, that we'll see something around the USDA's projection, 181 bushels per acre, 15.2, 15.3 billion bushels of corn. Greg Ivandahl in our shop has come out with projections based on crop ratings of even higher than that. So we shall see. I guess in my own cautious thoughts, I wonder about some Western Corn Belt drought impacts, some Eastern Corn Belt, far Eastern Corn Belt, Ohio, parts of Indiana being awfully dry, being excessively wet up in northern Iowa, southern Minnesota, South Dakota, and then on over into Wisconsin, parts of Michigan. So I get the idea that rain makes grain, but I just want to retain a healthy caution before we just go buy full in. And even if this August report comes out, especially for corn and maybe for soybeans, and says, gosh, we expect high numbers, we may not know, and we won't know the final outcome on this until we actually get into September and get in some areas start to see very early harvest to south and wet corn coming out and such as that. Now, all that said, if we do get what's expected, again, indication of strong yields, then I don't know where markets would go. I think we're basically with the type of prices we've seen on yesterday's closes, with again, Dees corn at $3.97. That'd be Dees 24 corn, and November soybeans at 10.08 and a quarter. I think they're already factoring in their expectations of large crops, and really that if there's a chance. I guess the question to ask is, if we get large numbers, do we go much lower at all? Is it neutral, or really are we reliant on something less than these record yields eventually to bring some more volatility to the market and actually bring something to the upside? and so either way, if there are changes right now that'll come out in that report Monday, I'd expect them even if they come in with somewhat less production, I don't know that you'd see, unless it's just a sterling surprise, see a lot of movement to the upside. I think we'll still have to wait till September, October to see how all that comes out. And for wheat, again, most of the well, the winter wheat numbers pretty well set. We're waiting for spring wheat, the spring wheat crop to be finalized. Crop ratings for spring wheat still looking well, very good. Really, this last week as high as it's been for the last 3 or 4 years, as far as percent good to excellent. So really not a lot of surprises expected on the production side. So I guess that'd be my take with regard to that report. So it's hard to see, given the momentum and the narrative of the market, much that would change the large crop, low price scenario, but and I just don't know if the August report will have enough close knowledge of everything to bring much change in that scenario. I think probably looking out to September, October, November to see anything different than that.
As we're thinking about prices, Dan, what are you seeing for cash?
Cash prices, again, we're seeing corn basis looking pretty positive, and here in the midst of I guess pretty negative price trends. You've got a 65 over basis in Garden City, $4.44 cash prices, 44 cents over in Colby at 423, 419 in Hutchinson at 40 over, and generally Topeka 20 over, and Salina about 13 over. And when you look at the trends in the western 2/3 of the state, you've had in the last several weeks some run up during the summer months, but that really hasn't continued in most areas. That probably the most positive trend that we've seen has been in the Hutchinson area. I would say though, in the eastern third of the state, around the Topeka area, around Columbus, down the southeast corner, very level. Really kind of, and I think anyway, Shelby, it's an indicator in those areas that, hey, it doesn't look like we're caught short anywhere. We have adequate supplies. We'll wait it out for the next crop. I would say though, when you look at basis trends for soybeans, and again, you can see us in the report that we put together each week. We've had in the Dodge City area, Salina area, Hutchinson area, Topeka, and also Columbus and Colby only just so, but in all those areas, sharp increases in basis levels. Of course, that's the basis is going up, and the future's been falling down, so it may be just an effort just to hold their own in terms of where the cash markets are, but still it is noticeable that soybean basis at the local level has been increasing, and you're seeing that happen at a time when of course the futures are coming down. So so I guess the way I would view that is that in those markets there's a desire or a recognition on the part of elevator bids, those making those elevator bids, that hey, we're not representing necessarily local supply demand that well with only looking at the futures keeping basis level. We've got they're increasing basis to kind of stay what they see to be an equilibrium market situation in most of the state.
Dan, are you seeing any other trends when it comes to basis?
uh for wheat, really, although we'd seen well, probably about similar situations with the weakening of wheat futures. We've seen basis about a month and a half ago in some of these areas, about 4, 5, 6 weeks ago, move higher, a little bit stronger in Colby, Salina area, Hutchinson especially so, a bit in the Topeka area, and also well, a little bit in Columbus. You've seen basis move higher right after harvest, but in general move sideways from there out. I would say that that if basis for wheat is moving, you'd be seeing something in wheat exports probably. That's what you'd be looking at. And we did have a good week of U.S. wheat exports. A lot of that coming out of the hard red spring side, and we've been up and down here of late for hard red winter wheat. Overall, we're sitting at about 32% of the way bought ahead, shipped and bought for the for the uh, for the hard red winter wheat market. We're about 32% of the way to 240 million bushels USDA projected, and only about 17% of the way, about 9 weeks into the market year. So still looking pretty positive. And you know, the uh, I guess the trends we're still seeing out in the world wheat market, with uh, uh, not the best conditions in the Black Sea region, too wet, crop damage in Europe, and questions up and down elsewhere, and uncertainty down in Argentina. There still are issues that could eventually drive much stronger, or I should much stronger is kind of a surprising term to use in terms of the wheat market, but at least moderately stronger U.S. wheat exports, and we shall see it again. We've just had such headwinds from the higher value U.S. currency in the wheat market that anything that turned out being positive for us would be really almost truly labeled as a surprise right now.
Dan, as we round out today's conversation, any thoughts you'd like to share with our growers about crop progress?
Well, I do think that it is surprising as you stack these crops up that um, we've we've had adequate moisture. Generally, the trends for percent good to excellent pretty positive all the way through. The only one that's not for us would be grain sorghum. That's been falling off, but again, that's been in grain sorghum in Kansas and Texas and Oklahoma, areas that have been a little hotter and drier. So I guess we'll see. So much of what happens now in the grain market will be probably dependent on what Chip Redman out of our weather shop tells us in terms of the weather the next 30 to 45 to 60 days, as we try to as we get through August and September and make our way into harvest. How do we finish these crops out? And I still am cautious about the whole issue of rain always making grain, especially in some of these areas to the north where it may be it will be a horse race between the moisture they have and the lateness of their planting and the unevenness of their development. We shall see.
Dan, I appreciate you once again joining us and giving us our grain market update.
Thank you, Shelby. I appreciate being on.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we'll have more for you ahead.